I am pleased to advise that on Tuesday of this week, the Securities Commission opened its one-month public consultation period for a series of amendments to the DARE Act. The amendments will address a comprehensive range of digital asset activities and strengthen protection mechanisms for the registration and ongoing supervision of operators. They represent an even greater focus on consumer and investor protection, robust risk management, as well as market development and innovation. Let me highlight that the process of developing proposed amendments to the DARE Act began in April of last year, before and not after or as a result of the events that led to the 10th of November 2022 collapse of FTX. The Securities Commission of the Bahamas, as well as law enforcement authorities in the Bahamas, are actively investigating the events that led to FTX's collapse. Due to the wide range of jurisdictions in which FTX operated and the size and scope of its business activities, the investigation is complex and continuing. We shall not comment or speculate on those investigations. Any view, however, that events which led to the FTX collapse are tied to a weakness in the Bahamas legislative structure is not consistent with the facts. Indeed, it was the strength of the DARE Act that enabled the Bahamas to act first and act decisively on FTX, with the Securities Commission quickly putting the Bahamas-based entity into provisional liquidation ahead of their filing for Chapter 11 bankruptcy, and securing FTX assets, which had a market or trading value of around $3.5 billion at the time they were secured. U.S. debtors in the Chapter 11 themselves credited the Bahamian regulatory framework in the securing of these assets.